stock and all things concerning stock. Now today I want to tell you that basically when we talk about stock, there's two things we're going to refer to. So the first thing we see here is trading stock, which we were talking about yesterday, and then you see the word deficit. So trading stock deficit is basically when I do my T account for trading stock and I end up on a balance. So I do a T for trading stock and I say, oh, my balance BD is 70. And now I go and I do a physical stock take and I see it's only 60. That 10 difference is my trading stock deficit. Now that would happen not necessarily with stuff that is stolen, because stuff that is stolen or damaged would most probably fall under insurance, because most businesses insure their trading stock so they can claim back. So we're going to treat that different. This trading stock deficit is stuff that is missing, but we don't know if it's stolen. There's no evidence, so I can't claim it from the insurance. It's stuff that got broken. For instance, earrings that lose their butterflies. Stuff that maybe the owner came and he took stuff for drawings, but he never informed the bookkeeper. So the bookkeeper never booked it, he never recorded it, but it's no longer there. So now what I count is less than what is in my books. You understand the concept? So do you think that deficit, it's obviously not an asset, it's not a liability because we don't owe money to someone, so it's going to fall under nominal section. So do you think it will be an income or an expense? An expense. Do you think it's possible that instead of just having a deficit that we can also have a trading stock surplus? Most definitely. And how would that happen?
The manufacturer gives us extra.
Yeah. So maybe we didn't count when they delivered it. We didn't do a proper checking. And they gave us too much stock. So now what we recorded and what's physically there doesn't add up. The same thing maybe a debtor returned goods. But the managers of the stock didn't inform the bookkeeper. So the bookkeeper doesn't know that stock came back. Then we'll also have a surplus. And that would be an income. Okay. The second one that you see. Yes. No, you're going to inform them and then return it. Because what is the main thing here? Can we not talk? The main thing here is that we want the stock that we count to be the same as the trading stock T account. Can you see in that way we can say the trading stock is actually a control account? Because if I compare that T with my physical stock, I can control if something is wrong. You see? If all transactions has been booked. We shop.
We have a trade deficit because drawing was not recorded and it's on a journal. How would you then record it?
No, remember, if it's not recorded, it means we didn't put it in the general journal as drawings trading stock. So it wasn't posted to trading stock. So we have to do it now. So we'll do it as an adjustment. We have to fix it. So obviously if there's a trading stock deficit, you're going to... Some products would be easier to investigate, like big items like TVs and fridges. But some items would be very difficult to investigate where it went, like a tin of peas. So it also depends on the product, what type of investigation, or if it's an important investigation or whatever. Okay. Now, can you see the trading stock? I want you to please look here. Pay attention. Can you see the trading stock is the original account that you know? And that trading stock is an asset. But the moment the word deficit comes with it, it means something happened to that stock. Okay? And that makes it an income or an expense. Okay. Now if I look at the second one, can you see what's the primary word there? Consumable stores. Now, it's very important that you understand that consumable stores can be seen as an account, or it can be seen as a heading of a lot of accounts. Because if I talk about consumables, I refer to stationery as a consumable, packing material is a consumable, fuel is a consumable, any groceries that I buy is a consumable, cleaning material is a consumable. So what am I saying to you? Depending on the business you work for, they decide how they want to T it. So they can have a T for stationery, a T for packing material, a T for fuel, a T for cleaning material. Some of them will use the word consumable stores for service material or cleaning material. So you'll have stationery, packing material, fuel, consumable stores. You get what I'm saying? But the whole thing is the word consumables actually refers to any of those. And we actually only need to have one T account for all of that. But most businesses prefer to separate those T's and they use the words. So you need to read if they are referring to consumable stores as a specific thing or as a name that describes all things that we use up. Okay. Now, if I look at this word, consumable stores, I know this is an expense. Can you see that's the primary account that we are used to work with? Now, can you see there's a word extra, on hand? So now, look at this. This is such beautiful poetry. If you look at this, the trading stock is an asset. Ne? And as soon as we add a word, deficit or surplus, it becomes an expense. Can you see now? So it's two different T accounts. Okay? Now, look at this one. Consumable stores is an expense. Right? Now, what is consumable stores on hand? So let's quickly discover what it means. If I have something on hand, it means I can touch it. What did we just discuss? What did we just discuss? We discussed that consumable stores is stuff that you use up. So if I can touch it, did I use it? No. So can you see, consumable stores on hand is the consumable stores I didn't use, the unused ones. Okay? And that is an asset. Why is it an asset? Can you see? The trading stock is an asset. When I add a word, it becomes an expense. The consumables is an expense. When I add the word, it becomes an asset. So let me explain this to you. Let's say I have packing material. It's the boxes that I put the boxes in. Okay. I have packing material of 7,500. Okay. Now, when I go look at this packing material, and I look at that 7,500, it means that was available to use. You agree with me? So that 7,500 is available to use. Now, what happens? End of the year, what am I going to do? I'm going to do a stock take. And this is also stock. So now I'm going to count all those boxes. You agree with me, the boxes that I'm able to count will be the ones I didn't use. Okay? Let's say that was 500 rand. I can count boxes to the value of 500 rand. Can you see the rest, the 7,000, is the one that is used? Does that make sense to you? So now I'm asking you, the ones that is used is consumable stores. It's my packing material. It's my expense. It will go to my income statement as an expense. So in the income statement I show what I used. The stock that I didn't use will become an asset. And that asset goes to inventory. Where does inventory go to? To the balance sheet. Okay. So in other words, the ones that I didn't use is an asset. Okay. Let me quickly show you a lot of T things. Let me show you. But first let me hear Atlicha.
My question is, since the balance is of packing materials 7,500, right? And that is the available amount for packing material. And 7,000 is the one that is used, which goes to the nominal section. And the 500 goes to the balance sheet. Why is the 7,500 available to use?
No, this is what we had the whole year. And then when I go and I physically count it, remember this is in your books. So when I buy, I record. But I don't record when I use. Ne? You've never gone in your packing material and on the credit side said, packing material used. You've never done that.
For the interruption, the following learners, first two learners, Motato Maledu and Real Betwe Logo, you need to go to the discipline office immediately.
So now fine. Okay. So you guys can now see that you don't record the ones you use. So in your books, you're literally going to see only that which you bought, meaning that which is available. Okay. So now, how will I know what was used? By physically going and counting the things that were not used. Because the ones that were used is no longer there. You see? Okay. So, I want to quickly show you the magic of T accounts. So, let's work with cleaning material. Let's make a T for cleaning material. Okay. And I say, okay, I have a balance. Let's say again, 7,500 worth of handy Andes. The end of the year, I go count, ne? And I see I have consumable stores on hand, meaning I can still touch it, of 500. Meaning, going to the income statement is the 7,000 I used. Does that T make sense to you? Okay. So now, yes? I didn't sell. I used. This is handy Andy. This is to clean the floors. This is not trading stock. This is consumable stores. It's an expense. Okay. Everybody sharp? Yes. So now I'm going to open a T called consumable stores on hand. And I'll have cleaning material of 500. And this is what happens the end of year 1. Is everybody with me? Yes. So now, do you agree with me? If I do a financial year, ne? And I say it started 1st of March 24, it ends, can't you see that? And it ends 28 February 25. Can you see there's the year? When does the new year start? The 1st of March 25. Can you see it's literally the next day? Okay. So now, say Thursday evening, we do a stock take. We have 500 bottles of Handy Andy left. Ne? Saying it's R1 a bottle. What am I going to do with that 500 bottles of Handy Andy the next day? Throw it away because it's a new year. No, you're going to use it. So now, what are you going to do? Your second step is you're going to reverse it. So you're going to say, oh, that cleaning material, I'm going to take it back to a clean T account called cleaning material for year 2. And I'm going to say consumable stores on hand, 500. So now, can you see? So the new year, I already don't have to run to Makro to buy more Handy Andy because there's Handy Andy in the cupboard. What you guys need to understand is a financial year is the only person who's really interested in the business in the financial year is the bookkeeper. Ne? You and me working for the business will not even know when is their financial year unless they tell us. Because my business continues day to day. I come to work, I sell products, I'm the salesperson. I come to work, I manage the stock in the stockroom. I don't have in my head, oh, today is the end of the financial year, so that 500 bottles of Handy Andy is consumable stores on hand. The person working with it doesn't think that way. They just come to work, do their work, go home. The guy who's the bookkeeper, he goes and he sorts it in financial years. You see? Okay. You guys with me? You had a question. Okay, so in other words, how they will give it to you is next year you will take this T account and you will reverse it. Remember now, what did we do on the 28th of February? We set up a pre-adjustment trial balance, a post-adjustment trial balance, a post-closing trial balance. Okay, now we are on the 1st of March. Are we setting up any trial balances? No. So you start from what are you working? You're working from these trial balances. Remember in grade 9 when I taught you, I didn't teach you, but you were taught that you take last month's trial balance to determine this month's balances. So, do you understand that if we have a post-closing trial balance, in the post-closing trial balance I'll only have B accounts? Ne? What is consumable stores on hand? It's an asset. It's an asset, so it's a B account. So, will there be a balance in my post-closing trial balance? Yes, it will say consumable stores on hand. So, when you come your first year, what are you going to say? You're going to start consumable stores on hand. This thing here is going to turn into a balance, 500. You see? Happiness. So let's go to the notes. So if I look in the notes, can you see that your notes to the financial statements, ne? You'll have note number 4. Note number 4 would be the note for inventory. And that note, up until now, consisted of trading stock. But now I taught you there's a new one there. Consumable stores on hand. Meaning, the stationery, the packing material, the fuel, the cleaning material, all of those things that's actually expenses that I didn't use up. It's still unused. Okay. Now, let's go look at an example. So this example says to me, can you see there? They give me a pre-adjustment trial balance at the end of the financial year. Okay? And they give me balances, meaning this is available to use during the year. So, your stationery has a balance of 4,000 and your packing material 500, and I already typed it in for you. Now, adjustments. How the adjustment will look like is they will tell you the closing inventory on 28 February is so much. Or they will say stock take on 28 February. Anything that tells you, oh, this is what we counted. Okay, so we can see it. That's why I tap my eyes. You can actually see it. So I counted stationery and packing material. Remember what I said. If I go here to stationery, I want to divide it into the unused, which goes to consumable stores on hand, and the used, which goes to profit and loss. You agree with me? Okay? So, from that 4,000, they counted 600. Meaning, 600 wasn't used. How much was used? 3,400. Can you see that one goes to the income statement as an expense? That one goes to the balance sheet as an asset. Okay? So in my consumable stores, it will say stationery 600. Can you see? The unused. This consumables on hand is your unused items. And it's an asset. Okay. The same is going to happen with your packing material. They tell me I bought 500 or I have 500 available. I counted 100. So it means unused is 100. Unused is the consumable stores on hand. Becomes an asset. Used goes to the profit and loss. How much is used? 400. And can you see that 100 also goes here to, what is it? Packing material. You see?